This evening you're going to get a chance to ask Mohit, who's our creative solicitor, does delay completion stuff for us. He's got several of my projects that he's dealing with at the moment that we're in the process of buying, and I use a combination of, there we go, there's Mohit. Oh, I've got so many people logging on, he keeps moving, and again, trying to follow it around. Good evening, Mohit. Good evening to you.
Hi, Glenn. Can you hear me?
Yeah, quietly. You're a little bit on the quiet side, so if you could move slightly nearer the mic, it would be great.
Okay. Is this better?
Yeah, that's much better. Okay.
Good evening. Sorry for being slightly late.
No problem at all. Thank you for joining us again this evening. You've done a couple of these with us before where we've mainly been talking about the lockdown and the effects that that's been having on everybody. But we're pretty much back to normal now, aren't we, from your perspective, from a legal perspective and conveyancing perspective?
Absolutely. Yeah, I think everyone is back in kind of property mode now. I mean, solicitors are still working from home, or some of them have returned to the office, but the majority of my colleagues are working from home. But apart from that, in terms of kind of clients, investors, developers, they're all kind of now pretty much active and are looking for deals or kind of going ahead with deals that were put on hold before. So yeah, we're lockdown seems quite a while away now, to be honest with you.
So looking at something and asking a question totally away from, the solicitors and legal stuff we're going to be talking about. As a company, how many employees have you got, and how is the working from home changing within your company? Because there's a lot of that going on around the country. There's a lot of people that are reducing the size of their main offices because they're letting more people work from home. How's your company doing?
Okay, so as a law firm, actually, to be honest with you, we're quite a niche law firm. There's two partners. There's myself and Paul Levy, and then each of us have a number of assistants that work with us. So we lead the work, and we're kind of client led. So we deal with clients directly rather than getting anyone below us to engage with clients. I mean, initially it was kind of difficult because it was just an immediate change from full office to kind of full working at home environment. But now, to be honest with you, I'm kind of used to it, and we've got everything set up here, and clients don't really see much of a difference, really, to be honest with you. And like I said to you before, most other law firms and solicitors or conveyancers that I'm interacting with are working from home. I do pop into the office maybe once a week or once every fortnight just to kind of get documents out where they need to go out on letterhead. But apart from that, there's not real change in terms of client perspective.
Can you see your company looking to reduce their office size?
Possibly. But I think it's too early on at the moment to make that decision.
Because I know, because you're kind of fairly small solicitors, relatively, so But can you imagine a lawyer's firm with like 50, 60 solicitors working for it? They would just need a hub, wouldn't they, of for offices and for meetings, and could pretty much work from home. And I think this is going to be a whole new thing. We're seeing so many people moving out of London, the demand for rent in London dropping, and the demand for rent outside of London increasing, where people kind of aren't necessarily need to be based where their office is.
Yeah, I mean, I agree with you. I don't think this is just a particular to the legal sector. I think for a lot of companies that have traditionally asked employees to come in to the office and work, and then maybe as a favour work from home one day a week or whatever the case may be. Actually, I think it's now going to completely be the other way around, where working from home might actually be the norm, and coming to work, maybe even sitting on the hot desk for a few hours, will be the way forward, and it will significantly reduce overheads in terms of office costs and office space, desk space, and like I said before, you might have to pop into the office just to maybe print some stuff off or get bids out or perhaps sign some documents. But apart from that, I think companies may start encouraging people to stay at home. I mean, certainly there are a couple of big law firms that are saying don't come back until September, and September is just an indicative date. We don't know. But I mean, you'll see. I mean, I don't know if any of the listeners out there read the Law Gazette. A lot of big law firms in London are already reducing office spaces and serving break clauses and exercising their break notices just to reduce it. It's just empty.
Yeah, of course. Look, from a service perspective, I needed to talk to you about the 13 flats you're taking options on for me that I'm selling straight out, and the freehold building that we're talking about. And getting hold of you is easy. We have the conversation we need to have. We don't need to come and meet you to do that, and we move it a stage further.
Yeah, absolutely. I mean, I think we communicate quite well, and other clients, we communicate quite well. I mean, getting in touch with us is quite easy. We don't need to meet. The technology's out there. Onboarding clients as well, it's very easy to do electronic money laundering, etc. So the client could really be anywhere, and that kind of traditional high street solicitor, you have to be local to your lawyer. That's not really necessary anymore, to be honest with you. You can engage anyone around the country, no matter where they are, and they can provide legal services to you.
Yeah, cool, brilliant. All right, well look, we're here to facilitate any legal questions that anybody's got. I was asked an interesting question by one of my clients today, Dave, who is actually on here this evening, but he was talking about buying a property in his name, but given a deed of trust to a charity to actually own it over the top of it, if that makes sense to you, and being able to, for the solicitors, not to pay the stamp duty due to the fact that the deed of trust means that it's a charity that literally owns the property and not him. Are you aware of this? It's quite a niche thing. I don't know whether you'd heard of it.
Well, certainly in relation to the first point, yes. I mean, a person can hold on trust property for another person or another entity, and the deed of trust is the document that sets that out. So yeah. I mean, that can be done in terms of the SDLT litigation, that I'm not 100% sure, and that you could check on HMRC, but certainly if the client's been advised by someone who specialises in tax and SDLT mitigation, then if that's the advice, then it could well be the case that yes.
I just wondered if you'd heard of that at all. Okay, look, anyone's got any questions for Mohit, he's here to answer your legal questions, any challenges you've got that you can do with help, please feel free just to type them in the chat box, and we'll work through them this evening. We've got the first question in from Andrew Lockley this evening. Can you get round section 24 by exchanging purchase contracts with tenant or using a lease option agreement? Let me try and just interpret that. So get around section 24, exchanging with tenant we're using a lease option agreement. I'm not sure, Andrew, I know what you're trying to do, because if you're not completing, section 24 is more the tax, that, you know, not being able to claim interest rate relief. But if you haven't got a mortgage then, so if you're only exchanging, let's just go on and let's find you, so you can explain a little bit more about what you mean. Sorry, Andrew, if you can jump on, you can perhaps explain your question a little bit more detail.
Can you hear me?
Yeah, got you loud and clear.
Yeah. So basically, you can't claim interest on a mortgage that you've got let under an AST. Okay. Mm-hmm. But if you have another agreement with your tenant, so for example, if they form a limited company and let it as a corporate, or they exchange contracts with you with a grossly extended completion, like 20 years or something like that, is there anything to stop you claiming back your getting interest relief, avoiding section 24, because you haven't got an AST?
So you're trying to find an alternative
form of contract with that tenant.
So you're trying to find a walk around for the section 24, yeah?
Yes, so section 24
yeah, that's exactly right.
is specifically in relation to income tax relief for residential finance costs. So if you have a residential buy-to-let product, okay, what a lot of my clients do and have received advice on this is basically, do not apply for a traditional residential buy-to-let product. You go to another normal high street lender and you just get commercial finance out. So what you say is that actually we just want a commercial loan, and it will be for the purposes of property investment.
Is that Mohit from buying it in your own name, but you're buying it in your own name on a commercial mortgage, or is that buying it in a limited company?
Both. So we could go out and say Mohit Chopra trading as Chopra Properties, and the purpose of this sole trader account is a commercial entity to buy up property, but we're doing it on a commercial investment basis. So we can still have it. We can still have residential and commercial properties in that portfolio, but it's a specific type of lending which you need to get. And once you've got commercial finance, commercial property finance, then the whole section 24 falls away.
Okay, so there we go. That's another workaround that certainly I've discovered this evening that I wasn't aware of. So great question, Andrew. Does that answer everything you wanted, Andrew?
Yeah, my thinking is whether or not something that's once we've exchanged contracts on a property for sale, then does it cease to be a residential property for the meaning of section 24? Because if you've got a purchase lease option or something like that, it may be that it's no longer regarded. I get what you mean by controlling the finance side of things, but it may be that you can control it on a contractual basis, because if it's been so I've heard one structure you can use is form a limited company that does your lettings, and so you do like rent to rent off yourself.
Yeah, but that's a whole, the rent to rent is a whole different thing, Andrew. It's just a commercial transaction. We're talking section 24, it's interest rate relief on a mortgage. If you're renting a property.
I understand that, but what I'm saying is if you're renting to a company, so you might form Glen Armstrong Limited, right? Mm-hmm. And Glen Armstrong will rent all of your properties from Glen Armstrong the human, mm-hmm. right? And because the tenant, as far as your mortgage is concerned, is then not a human, mm-hmm. it's a commercial let, and then Section 24 doesn't apply. Now, it's possible that you could do that in a couple of ways. So either the tenant forms a limited company and rents it off you, or alternatively, as I said, you exchange contracts, and then because it's kind of in that limbo land where it's exchanged but not completed, then maybe there's no Section 24 can't see your property portfolio because it's kind of not in a state where it can recognise it. I'm trying to understand whether there are these little chinks in the armour where you can get through. Because obviously, for anybody who's renting property on a low yield, Section 24 is absolutely catastrophic. So instead of refinancing the portfolio and moving to a limited company, it might be that you can just use one of these little clever contractual hacks so that the Section 24 tax just can't see you, basically.
Yeah, I like that wording, clever contractual hacks.
I think it's more of a matter. You need to break down the statute and then establish exactly what falls in the definition of residential property finance costs. And I appreciate what you're trying to say. You're trying to say, well, actually, the type of agreement that you enter into between the landlord and the tenant may determine that. But to be honest with you, I'm not 100% certain. I think unless we break down the statute and work it out, and it's probably I think tax advisor that
I think an obvious one is
I think we might have lost you, Andrew. So I think we've actually lost Andrew, so we'll come back to Andrew in a little while. He's kind of faded out. Right, Mohit, you still here?
I'm still around.
Have I lost you as well? Okay, cool. Right, so Palmetto has said, how can you delay a seller in completing and for how long would it work? Traditionally, Palmetto, you have a simultaneous or a 4-week exchange and completion. But the answer is it can be as long as the seller and the buyer agree. There has to be a long stop date, but the definitive answer, as far as I'm concerned, is the life of the mortgage. Because at some point, the seller will have to re-agree the mortgage, which is what you've agreed to contract around their mortgage. Anything you want to add to that, Mo? Yeah.
No, I mean, agreed. It's by agreement. Yeah. So yeah, I mean, if you're about to enter into a contract, whatever type of contract it is, then the completion date really is by mutual agreement, so whatever both parties agree. But you're absolutely right.
Quite often it's a year, but one thing to make sure is if you're buying something to do up and sell and you're tied into a year, that there's a plan B, that if you get to the end of that year, that you've got an agreement to extend, even if it means giving them a little bit more. Because if you go into a contract to do work to then sell it on, and for some reason it doesn't sell, and at the end of the contract your option expires, you can have a problem. Or if you come to your deadline, they can then serve notice for you to complete. Ron says, have you ever heard of property entrepreneur stamp duty?
Sorry, is that a question
Yeah,
to me?
yeah, it's certainly nothing I've heard of.
No, I mean, I've not heard of it, no.
No, okay. And Ron asks another question. Would a bridge or term loan provider lend you 100% of the purchase price if it values 125 in excess of what you're paying? So Ron, I have companies that I've borrowed from, bridging companies that will lend 75% of value rather than 75% of purchase price. Most lenders want you to have some skin in the game So, you know, whether you're buying at 50% of the value, they still want you to put your 25% in. Okay, so it is, you know, down to a broker to find you somebody who will lend based on value and not purchase price. So yeah, now there are workarounds, Ron. So for instance, if there was a £100,000 property and you'd agreed to buy it at 75 grand, you could get a nominee to take an option on the property at 75 grand, and that option agreement could be that if he sold it on for a higher value, he would have to give the option holder the difference. Then the seller would sell it to you at 100%, i.e. 100 grand, and your nominee would get 25 grand back from the conveyancing solicitor. But the person who's got the 25% back is not allowed to then give it to you, or you would have had to have declared it to the lender that you was getting your deposit back out of the deal. Anything you want to add to that, Mohit?
No, that's fine.
Okay. So Christopher says, beneficial ownership, what is involved in declaratory trust, which enable one to transfer beneficial ownership to a limited company, thereby making the company responsible for the tax rather than the legal owner. Is this regarded as tax avoidance? What is involved in revoking this at a future date? So I think, Mohit, you've been involved in more of a tax side of things. Please don't get Mohit muddled up with a tax advisor. When we've had our Section 24 experts on, this is all, and trust experts, that's all in that. I don't know, have you done many things around trusts and beneficial ownership, Mohit?
Yeah, so in terms of setting up trusts, no, we always just refer that to someone else in terms of setting up trust, whether it's in this jurisdiction or an outside jurisdiction, in terms of kind of straightforward things where we have deeds of trust for property ownership or for family ownership, then yeah, I mean that those can be done. That's quite straightforward, and kind of what we touched upon at the beginning of our conversation, where one individual will hold on trust either the full percentage or a part percentage of the ownership of a particular asset, then that's fine as well. And the true beneficial owner can protect themselves by putting some sort of restriction on the title or some sort of notice on the title as well. But yeah, I mean that's quite straightforward and can be done quite easily.
Okay, cool. Gareth said, did I just hear you correctly? If you get commercial lending on a buy-to-let as sole trader, Section 24 does not comply. That's what I said. Yeah, correct. Okay. So it depends on the finance product, and so when you do, if the borrower can gain what's called commercial property finance, then obviously there's a big difference between that and residential property finance, and that will obviously assist in 24 mitigation. Okay, cool. Imran, again, another tax question really, and I need to remind you that Mohit's a lawyer, not an accountant. His question is it worth putting a property which is let and paid off into a limited company? And that's really from, is there a financial gain from doing it, which is a question that really you need to be asking an accountant as opposed to a solicitor. Is there anything that you can add to that at all, Mohit?
Yeah, I appreciate obviously that there's a number of people out there that want to know what the benefits are from moving from personal name into either a limited company or an LLP. And again, I would say it all comes down to your individual personal circumstances. A lot of people do it because they're kind of hitting a 40% tax bracket and get advised that actually you should start moving assets. And you've got to remember there's obviously an SDLT and maybe a CGT implications, but there are ways around it. But definitely you must seek advice from a professional, so an accountant or a tax advisor who specialises in that area. And what usually happens is we tell clients to go away, they kind of set up the structure, and then we just follow what they tell us to do in terms of transfer, because there are some instances where you can follow agent policy guidance, not pay SDLT, but there is a procedure and an accountant tax advisor will be able to tell you that.
Yeah, we have somebody comes on around once a month and gives anyone on here advice in the evening, and also have free consultations to see whether there's any benefits to setting you up in a legal structure that will cost you to put things in, but over the long run will be, financially beneficial for you to do. Palmetto says, can you exchange contracts for like £1,000 and that will secure the purchase until mutually agreed completion date? Palmetto, you can actually exchange for £1. It's unusual, but it's well, for me it's not unusual because I've done it hundreds of times. But exchanging contracts for £1 is okay, and I even believe that you can use a peppercorn to exchange contracts on, because is the peppercorn still a legal instrument? Have you ever covered that in lawyers' school, Mohit?
Yeah, peppercorn is a form of tender. I mean, obviously you don't physically give someone a peppercorn, but it's quite common in terms of seeing it in leases and other documents. However, I think the preference and tendency nowadays is a consideration of £1, and that's kind of what we use nowadays. But you do see the peppercorn sometimes.
Is that where the expression peppercorn rent comes in?
Correct, yeah. But back in the old days, people used to actually physically provide a peppercorn, because from what I've read in history, pepper was quite an expensive commodity and quite an expensive spice. So it was very, very valuable actually when they shipped. So hence why it was a form of tender in documentation.
Okay, cool. I know I exchanged contracts on a property, and there was a covenant dating back many, many years that I had to pay a farthing every quarter to the local lord. So there are some quite weird things that come up every now and again. But Palmetto, exchanging for £1,000 is fine. Quite often I'll exchange contracts to pay their arrears off with that amount, or when they specifically need something, like so people that were being repossessed, we've exchanged to pay their arrears off. People that have had no money for Christmas, I've exchanged with £2,000 and allowed them to draw down the £2,000 through the solicitors, through me approving it, in order to give them money for Christmas. There's all sorts of ways, so £1 isn't the definitive figure, but I did one recently for £28,000 because that was their arrears. So there's all sorts of different reasons to use different values, but there's nothing wrong with £1. Mike said, I think it's a question to me, would you recommend for commercial finance, or would the rates be comparable? Mike, you've got to look at the big picture of everything, and everybody's different because everyone's in a different situation. If you're a lower rate taxpayer, it's probably not so important. And yes, you're going to pay more for a commercial finance on a property, But if that saves you overall on getting a residential, a normal traditional buy-to-let, and then you don't have to pay Section 24, then maybe that's one way around it, or maybe you're better off to actually just buy a limited company and to pay slightly different figures. And by the look of my cameraman who supports Arsenal, it looks like Arsenal's just scored. Just so if anyone's a football fan, I'm not sure who they're playing tonight, but I don't think they've won for a long while. It's about time now. Norwich, there you go. They're third division now, Norwich.
Yes, couple of seasons.
Okay, right, bit of banter going on in the background. Right, so Palmetto says, so the nominee, you really need to borrow the funds from somebody else or through a 3-day bridging loan. So it goes back. Palmetto, if you're actually going to do one of these, talk to me and I'll talk you through the structure, okay? Teresa said, I have a lease option which I want to sell on the open market. Now, with the owner's permission, what's the best way to do this? In my name or a company name? What name do you hold it in, Teresa? Do you hold it in your name, the option, or do you hold it in a company name? So you hold it in your name. So if you hold it in your name, then you will probably want to sell it in your name. But there's nothing to stop you creating a limited company and putting the profit in there, and there being some sort of charge for selling it on, so like an estate agency charge for the amount of profit you make. I'm not quite sure what you're trying to achieve by swapping it over from owning it in your name and selling it in a limited company. So hopefully that's, so Teresa said, what's tax efficient? That's again going back to an accountant's question, and Mohit is a lawyer, not an accountant. So David Bird says, so Glenn, the tactic you just explained sounds like it's illegal if you're not supposed to reveal that the owner or the bank mortgage can the solicitor comment on that. So Dave, basically what we've said is you can have a nominee, and I'll get Mohit to comment on this later, that gets the benefit of selling on the option to you, and if they were then going to pay you that money back, then you should have told the mortgage company that you were getting the money back. Mohit, do you want to comment on that?
If we are acting obviously for a buyer and there is a lender involved, then obviously there has to be full transparency and full disclosure. So if there is any sort of money flow back to the buyer or vice versa, then obviously that needs to be disclosed. You have a duty, a professional duty to do that. If you're acting for the seller, then no, because your only client is the seller. In terms of the legality of the transaction, so from what I understand is what you're saying, Glenn, is that we have an option holder who sells to the middle person who then sells on to the final person.
Yeah.
Is that?
Yeah, it's exactly that. So let's just structure it and say, look, I've got my cameraman sitting here videoing my recording tonight. He takes an option out with David to buy his property for 75 grand. The option is slightly worded different to a traditional option in that it says if the owner of the property sells it on for a higher amount, so David, if you sell it for a higher amount, the difference would go to the option holder. Okay. Normally the option holder actually sells it on themselves, so when it sells for the higher value, you are, as the buyer, transacting at the higher value. The option holder gets the benefit of the uplift, and that's how the transaction works. Now, if the option holder tries to give you the cash back, that actually takes it into mortgage fraud if you do not let the lender know that that's what you were going to do. And if you let the lender know that's what you were going to do, then they'll actually won't let you do it anyway. So that's the dilemma, is the option holder has the discount in their pocket. So that's pretty much where we are.
Okay, can I just add something?
Yeah, sure.
To be honest, in my experience, actually, from the scenario that you're giving, actually, is quite common. So you are the landowner. I am the person with the benefit of the option. So I have entered into the option with you. But all I do is I'm gonna assign the option agreement to the final person for much higher price than I've agreed with you, simply because the end user sees much more benefit in taking the land than I do, and it's quite common where there's an overage provision or an overage clause saying that anything above whatever it may be, the $500,000 that I've agreed with you, Glenn, comes to me.
Yeah.
Either directly. Or it goes to the seller, and the seller solicitor undertakes to send the money back
So the option holder, yeah.
Yeah, I mean
It's quite
common.
Yeah, it happens if you've got planning. Quite often people take an option, get the planning uplift, and then sell it with planning. So therefore, it's got a much higher value, and they get the benefit of the higher value because they paid for the property to get the planning.
Correct.
Okay. So Fitzroy says, could you expand on the commercial finance bit again? So I think he's asking about the commercial finance to get around the SDLT again. Sorry, not the SDLT, the Section 24.
Yeah, okay, fine. So the section 24 relates to interest mortgage relief in relation to residential property finance, and the word residential obviously is quite important. So from my experience and from the way that I've worked with accountants before currently is that what you need to do is go out there and you do get your mainstream lenders that do this, like Lloyds, HSBC. I think even Metro actually do this as well. What you need to say is that, look, I'm looking for commercial finance to buy a property. You're not looking for a residential buy-to-let mortgage, you're looking for commercial finance. And again, this commercial finance will be long-term finance, 5 years, 10 years, 15 years, 20 years. And that way, you've got a commercial finance mortgage, which obviously you can deduct the interest from that, from your tax. So that's the product you need to look for.
Okay. All right.
That's clear.
Thank you. We just had Carmelo commenting on the Arsenal result going boo. Gary's just cheered again, so I think that was about a minute ago. I mean, Arsenal have gone 2-0 up.
Yeah, 2-0.
But we're not going to run commentary on that, especially when Arsenal are winning. Right, Surin, I think it's pronounced correctly. Could you please let me know how if I can get bridging loan to purchase a residential property? You can, but you're very limited because most bridging companies only deal with unregulated products. The minute you are buying it to buy your own property, and it's very dear, so it's unusual to do that, but the minute you're doing it to buy your own property, then they're going to come into regulated products, and a lot of them aren't allowed to do regulated mortgages or regulated loans. So, that's more the high street lenders that do the regulated stuff. But they do bridges for you to do things up and get them mortgageable, so you can then get a traditional mortgage on them afterwards. So hopefully that answers your question on that. Gareth says, I'm trying to buy out a lease option on a property, but find it hard to find lenders who will allow me lending on a property. I'm trying to buy it in my limited company. Any suggestions? All you're doing is completing on a property at a price that you've agreed. Let me just find Gareth and talk to him, because let's go live with Gareth. Hi, Gareth.
Hello.
Hi. So yeah, I'm sure. So is it because it's under market value that you're having the trouble from lenders?
No, not really. It's just that they don't. Well, I've got two going forward at the moment. One is it's just a normal lease option on purchase price, which was agreed about a few years ago. So yes, it has gone up in value.
Right.
And the other one is.
Let's talk about the first one first, and then we'll get to the second one. So, when you're applying to buy the property that you've had on a lease option, all you're doing is you're exercising the option that you had to buy it. So the transaction is from you to the vendor. So the mortgage lender shouldn't have any problems with that unless you're buying at under market price, in which case they might query why you're buying it, especially if that's down to surveyor's comments, if you're buying it under market price. Or are you trying to be creative, so you're buying it at a higher value and trying to get your money back, to use as a deposit?
No, I'm not. I'm just trying to buy it, but I'm finding that because what I want to do with it is turn it into an SA, but they're not.
Right.
They don't like that.
Right. Yeah. So that's not your problem. It's not the problem that you're trying to cash out a lease option. It's the fact that you want to do it as a serviced accommodation, which is a guest house, and most lenders don't like lending on guest houses.
Okay, so are you suggesting to go down the commercial lending route then?
Yeah, you've got to. For serviced accommodation, you've got to. So that's the route round it. Now, if you set up the lease option a long time ago, where the lease bit was allowed, so you paid it in two bits, a bit to cover let's say the lease bit of it, and then a bit of it to save up towards the mortgage. If you'd paid that in two different things, you could have accumulated some of the deposit to pay, but that's just setting stuff up to succeed early days, to get the benefit of the some of the money that you're paying each month to go towards the deposit.
Okay. All right, let's answer that question. I've got another one going through as well, and that is a lease option where I agreed with the vendor to buy it at a set price, and they didn't have any mortgage on it, so therefore, basically the money I was guaranteeing paying them each month was coming off the purchase price, so therefore I was building up a deposit.
Yeah.
Effectively.
Yeah. So that will depend on how the original contract was set up, and also how you indicate on the payments each month that if you'd have actually put it as a reference of you know, deposit payment, you'd probably be able to get it through a little bit easier. Where are you with that Mohit?
So just repeat what the question that you're asking me to answer. Sorry.
Go on, Gareth.
Shall I
Yes,
read
please.
that?
Yeah, go on.
Yeah.
So basically, I'm finding it difficult to buy out a lease option, which I arranged a couple of years ago, set up a couple of years ago. The purchase price was set, and all payments I made on it would come off the original purchase price. So therefore, I was basically building up the deposit.
Yeah, correct.
But I'm finding it difficult to, lenders aren't seeming to like that.
So I think, so if you don't mind me asking, so I mean, I heard what Glenn was saying, the fact that you want to use it for a different purpose.
No, this is a different one. This is a separate one. So Glenn's explained that if you buy something on a lease option, and if I then decided to turn that into a serviced accommodation, then I'd have to go down the commercial route, which is yeah, I've got that now. The other one, I've got another lease option going through, which is just a normal, it's a flat, and it's a residential buy-to-let mortgage. But because I arranged the lease option a couple of years ago, and every monthly payment I've paid on that is effectively building up the deposit, they don't seem to like it because I've built up a deposit over a number of years.
No, I think that's where that's coming from is when you're putting in your application for your mortgage, are you actually trying to tell the broker that you've already done that, or not saying anything and just leaving it for the solicitors to decide whether that they're happy with that to say that that's your deposit?
Well, the broker knows. I've been upfront with the broker and I've showed him the lease option and everything, and he seems to be happy with that. And the solicitor I'm using actually set up the lease option anyway.
I mean, all you're doing is all you've simply done is basically advanced in small tranches the deposit already to the seller. In reality, that's what you've done, haven't you?
That's exactly what I've done, yes.
So that's down to the solicitor's interpretation of it, isn't it? And nothing needs to be told to the lender, does it?
I think there might be a problem with perhaps how this is being presented to the lender, because if I was the solicitor that set up the actual option agreement and fully understand obviously what's gone on and understand option agreements, then I'd be okay with that, because I would just simply be saying to you, well, look, we're going to exchange on what we've paid so far, less whatever the shortfall is, whatever the case may be. If it's £100 grand deposit and you've paid 80 so far, then we just need to pay them another 20 in terms of the balance.
So the broker doesn't need to know any of that information up front, which is probably where it's breaking down, because if the broker actually tells the lender that's what you're trying to do, and then the solicitor's trying to confirm it, where actually when the solicitor knows exactly how you've done it, there's no reporting to be done.
Okay, so it's more of a broker issue then?
Yes.
That's the impression I'm getting. I'm getting the impression that is the way that perhaps it's been presented to the lender, because, to be honest with you, your mainstream lenders are just traditional. Buying the property, you exchange, you complete, and that's it. When you start getting into complicated things like this, they're just like, look, we don't want to know, we're not interested. So, I mean, the only other option, I don't know whether you want to go down this option, and obviously Glenn probably can jump in if I'm wrong, but it might be a case where actually you find a bridging company that will do this for you, keep it for 6 months and then refinance. So at least you've got the property in your name. You've completed it.
Yeah, it's just going to be more expensive on cost. I would say you go to the broker You tell them you want to buy the property, you tell them the price you're buying, and that's it. You don't need to tell them that you've already prepaid a deposit, because it's got nothing to do with the broker. It's all to do with the solicitor being comfortable that the setup was correct, that is going to go towards your deposit, and then the solicitor doesn't even need to report it to the lender, because it is in fact money up front paid in little bits towards a deposit.
Yeah.
I agree with Kevin that all the lender will do is say, well, fine, look, this is what we're going to provide you in terms of finance. You've got to put in whatever, 30%, 40%. You might have already paid the majority of that already. And then once you get your mortgage offer, the lawyer who's dealing with it already knows you've advanced X amount to the seller, and therefore it shouldn't be a problem.
Okay. I think I'm telling I am agreeing with all you guys, because I think the broker is not being creative enough. I've been totally upfront with them, told them everything, even showing the lease option agreement, which I probably wouldn't need to do.
No, for that it's not. If you've legitimately been paying off the deposit, then it's nothing you needed to tell the broker. But because you told him, he's felt the need to tell the lender, and the lender, they don't need to legally know that you've done something legally right.
Okay.
But it's Mohit that is the lawyer that understands all this stuff, and is saying that you didn't need to tell them, and if he'd been party to the lease option agreement that said that you were paying it all off towards the deposit, then he wouldn't have a problem with it.
Okay. Brilliant. Okay, thank you very much for that.
Okay, all right. I'm going to finish with this last question for you, Mohit, from Palmetto. When creating a heads of terms, what is the minimum that needs to be in there to keep you protected?
Well, it's quite a difficult question to answer, because heads of terms, what type of agreement are we just in? An option agreement, a lease option agreement, a commercial lease. There are specific terms for whatever specific transaction you're entering into, but it needs to. If I'm acting for a client, what I'd say is that, look, everything that you want to be documented in your contract, whether you think it's relevant or irrelevant, or how small or big you think it is, or whatever you've negotiated with your seller, let me know, and we'll reflect that in the contract. If he's still online, if he could give me a specific answer in relation to what type of agreement he's referring to, then that would help. Otherwise, I'd say to him and to any other person out there, look, heads of terms ideally will assist us in drafting the contract, and it should be reflective of what parties have agreed. Yeah,
so what I always say to my clients, Mohit, is don't let the solicitors do the heads of terms, because that will just build up a huge cost. You do the heads of terms with the person you're transacting with, and when you're both happy with it, you give it to your lawyers to legalise.
Absolutely, I agree with you. Heads of terms, there's no specific format. It doesn't have to be presented in a particular way, but it should really have the terms that both parties agreed, and like you said, we will reflect that in terms of legal terminology, in terms of contract terminology in the contract. The clients don't have to worry about that too much. And if there's anything we're unsure about, we'll obviously pick the phone up to the client and speak to them. But everything that they think is important, then put it down.
Okay, brilliant. All right, well, look, Mohit, thank you very much for joining us again, and helping my clients out with their questions. Hopefully this has been of use to people this evening. I'm going to wish you a very good evening. Tomorrow evening I am doing a question and answer section, which I do every Thursday, and Friday we have our mortgage broker on to do mortgage questions. If you want another accountant to come on and you want to start asking all these tax questions, please drop me an email and just ask. Basically, whoever I'm being asked for, I'm trying to get. So the most amount of people requesting, I'm trying to fulfil that and get the right people in. So thank you again, once again, Mohit, for joining us this evening. And thanks everybody else for joining me. I hope it's all been of good use to you. Take care, have a great evening, and make sure you stay safe out there.